Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Antec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, first week of the month. Well, non-farm payrolls week, so that is the big driver of economic data, and not only that, we've got a whole range of PMI data as well. So everything is going to be pointing towards economic growth and the potential for further big monetary policy moves from both the ECB and possibly the Fed. Now, already Monday morning, we've seen the Eurozone CPI coming out, again, lower than expected. So that's going to help to drive expectations of a big move from the ECB. Will it deliver that big move? The Schatz on the German 2-year yield, that's certainly suggesting 20 basis points to the downside on the deposit rate. Are they going to be able to deliver? And also now the markets will be looking towards, for the rest of the week, all this PMI data you've got from China, from Eurozone, from UK and US, all on Tuesday. And certainly the markets will be focusing on that as the week progresses, and exactly how those numbers come out will drive expectations, I think, of risk appetite. Now, obviously the oil price is still a big story in the press. Whether the OPEC members come up to some sort of agreement to freeze production levels, will it make a difference? But certainly at the moment the oil price goes higher, and that is helping risk sentiment. The other thing that's helping, or certainly is a big mover of the markets at the moment, is the stronger dollar. That's coming through again. You're seeing some interesting improvement in the inflation data from the States, and also GDP on Friday. So what is that going to have an impact on for the Fed? Questions are going to be asked certainly in the March meeting. So a lot going on in the markets coming up this week, but we're looking forward towards the forex markets and how they're looking out for. So what's happened to the euro dollar? Well, as I said, we've had that stronger dollar coming through. That's pulled euro dollar lower, sharply moving below the 110.50 level. It's broken an uptrend, and it looks like it's going to continue to fall with this inflation data for the eurozone disappointing. That means that it's now coming back towards the key support at 108 figure area. That is a big test for the Eurozone. Big floor, or historically been a pivot band, but certainly has been a floor in recent months. Will it continue to hold? Cable, big problem over the Brexit. This Brexit factor is really weighing on the cable price, and allied to the stronger dollar, big downside move on cable. So we're seeing a breakdown, and we're seeing a move maybe back towards the 2009 lows. 136.50 is that initial support that you've got. 135 figure cannot be ruled out, I think, if the momentum really starts to move. And dollar yen, really strange move actually on Monday morning, where you had a large amount of yen strength, and that helped to sort of unwind a lot of the rebound that had been coming through. Doesn't necessarily sort of get rid of the bull argument, but still it's sort of questionable. I think 112 to 112.50 is a pretty big support band now near term that needs to hold, otherwise the bears are going to get really back in control again. So what about the equity markets? Well, we've seen the improvement in equities coming with this improved sentiment in oil price, driving markets higher. Big oil component in the S&P 500 and also the FTSE 100 as well. That's helped these markets to improve. We're seeing the correlation still intact, the positive correlation between oil and these equity markets. And the S&P 500 pushing above 1947, big breakout level that is. That sort of implies a turnaround, because that is a key lower high that's been broken. So markets need to hold on to that. Big support now between 1890 and 1947 on the S&P 500. Similar sort of story looking out for in the FTSE 100 actually. FTSE's just broken out, or certainly broken a big downtrend channel, and it's looking to improve, and it needs to break above that 61.15 key resistance, and that is the key February high. And if it can do that, again, that's another instance of a key lower high being broken. DAX is a little bit less technically strong. It still is pushing forward. It still needs to hold above, to be honest, than that big 76.4% fib retracement at 9308, and that is the key level that we need to watch out for this week. And for the commodity markets, well, we've seen the gold price, which has been on a big run higher, continues to move higher, but I'm still questioning these momentum indicators that are coming through. So look out for the daily analysis there for more details of my take on whether I think gold could be sort of just running out of a bit of steam. It'll be interesting to watch whether that happens or not, because silver has already broken down. Now the oil price, as I said, big move higher, big continuing run higher. And it looks like now on the WTI contract and also the Brent crude that we're seeing some gains, and we could be testing some key resistance levels. We've got on WTI 34.80 on the Brent crude price. We've got 36.25. Big resistance levels overhead. So can it continue to run higher? It looks at the moment that it's okay, and it'll need to continue this week though. So maybe more news on OPEC, and certainly some US economic data, and also that big China data for the manufacturing data coming out. So that takes me on to the economic calendar, which this week, as I said, big focusing across all those PMIs. Not a great deal of improvement that we've got, to be honest, on the forecasts. And we certainly need to see a pick-up. We saw last week the flash PMI for the US falling back below 50. Unexpected. What's that going to do to the ISM non-manufacturing? Big 80% of the economy, or thereabouts 80%, is service sector driven. So that is a really interesting possible move there. And we finish off the week with, of course, non-farm payrolls. Big payrolls report, because it's the last one before the Fed meeting for March. We've got a Fed meeting that contains the press conference and also the Fed member projections, so it could be a big historic meeting there. And this payrolls report has got the potential for 195,000 jobs, which is sort of average, pretty much average there or thereabouts these days. 4.9% on the unemployment, but the interesting component will be the average average hourly earnings, which is expected to improve to 2.4%. So that would sort of continue this improvement in inflation, if that was the case, or indicators that suggest inflation, and the market would certainly consider that to be dollar strength. So I wish you good luck in your trading today. This week, lots going on throughout the week, lots to drive your investments, and I will speak to you next time. Thank you.